Joining us now is Ed Yardeni, president of Yardeni Research, who says AI could be the thing that kicks off the roaring 20s. Stephanie Link also feels there could be a lot of industries that benefit, and welcome to both of you. Ed, I'll just start with you. You say roaring 20s. I say, hard landing. And markets are voting with you right now, I think.
Oh, I say potato, you say potato?
Yeah.
Look, I think that the 1920s is maybe a good model for what could happen during the 2020s. The 1920s started out a couple of years before that with a global pandemic, the Spanish flu that killed millions of people. And then we had a depression in the United States in 1920. So things must have felt absolutely horrible at the beginning of the decade, and yet it turned out to be the roaring 1920s because of all the technological innovations. I think that a lot of the technologies we have now are kind of coming together: robotics, automation, nanotechnologies, and I think AI is sort of the glue that puts all these things together into a technology that increases the productivity of the brain. Technologies in the past increased the brawn of productivity, lifting things, whereas this is going to supplement our ability to just think faster and come up with ideas faster and solutions faster.
Stephanie, how do you react to that? I mean, is the potential of AI so vast across so many industries that it could be a real productivity and prosperity lifter?
Yeah, I mean, I think it's the real deal, right? The total addressable market for AI is going to be something like 2 to 3 trillion by the end of this decade. And annual growth on a compound annual rate is about 37.3% per year. And only 25% of the companies in the United States actually use AI in any way. And we've been hearing from companies all across every different sector talk about AI. I mean, I was just going through some of my industrial companies and how they talked about on the conference calls a lot of different kinds of AI, right? I mean, Ingersoll Rand and Rockwell Automation and Emerson Electric. But then I'm also looking at some of the hospitals and looking at smart healthcare. That could actually be a $200 billion total addressable market. Think of like processing, right, and data records and that sort of thing. And then, of course, there's also robotics, as Ed mentioned. That's a really big part in like the industrial side, agriculture and that sort of thing. So I think there's a lot of areas, a lot of sectors that are going to win. I think this year it has been interesting that it's been really focused on the technology companies. Almost everybody else is getting ignored. But I think over time, we will recognize that this is definitely a productivity enhancer. You need stronger compute power, more storage, and faster networking, and that's going to benefit many different industries.
You know, Steph, I think I sort of trying to think through the AI and the sort of macro, the business cycle at the same time. You might say, okay, AI is certainly taking the sting out of what would have otherwise been, a harder landing so far. No question, especially for semis, coming out of the cycle. What's happening with the rest of the stocks? Is it true that everyone else, there's the debate between the equal weighted versus, the market cap weighted? And because you have the granularity of following so many other companies, do you think they're healthy right now? Are we gonna be okay for the rest of the year if we kind of exclude the AI story? Is that masking weakness elsewhere?
Well, I think there are a lot of companies and sectors that have actually done quite well in this past earnings season, but they're really not getting the credit. And I think when you go back to tech, yeah, the top 7 mega cap tech companies account for 90% of the year-to-date returns, but there's other parts of tech that's done well too, Kelly, right? SMH is up 30%, software is up 40%, cybersecurity is up 30%. Now that's tech and comm services, and that's 35% of the S&P 500. So to the extent they hold up, I think the market can hold up. Hopefully, eventually, we will get credit and give credit to some of these other sectors that are doing a lot of wonderful things, too. But so far, not so much.